Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Fabric and its subsidiary Intellica raises $13.5 million in Series A funding round. Led by Nuveen, the fresh funds will be used to scale its cutting-edge data and energy solutions. Intellica currently serves over 3 lakh EVs.
Finvolve and India Accelerator invest 2.5 crore rupees in AI-powered claims management platform Paramount. The firm plans to leverage this funding to strengthen its proprietary software, enhance digital claims management capabilities, and expand its presence across insurance companies in India.
Here's App announces a 8 crore rupees ESOP. The hearing care solutions provider plans to expand to 250 stores by FY26 and 500 stores thereafter, targeting twofold growth in the next 3 years.
Apple is seeking to import most of the iPhones it sells in the United States from India by the end of 2026. Sources say the company is aiming to accelerate the shift beyond China to mitigate the tariffs.
Google's parent company Alphabet reports quarterly revenue of $90 billion and profit of $30 billion, beating street estimates. Chipmaker Intel reports a quarterly loss and cuts growth outlook along with a warning on potential layoffs.
Over 28,000 startups in India have shut shop in the last 2 years as per data intelligence platform Traction. While some filed for bankruptcy, others remained inactive for more than a year.
Well, those were the headlines we've been tracking for you this evening. Tech-enabled Intercity bus network platform Intercity SmartBus has hit the accelerator on growth, clocking a 70% year-on-year revenue surge and cruising steadily in the profitability lane for the second year in a row. With a 10x jump in adjusted EBITDA, Intercity SmartBus now has its eyes set on a 1,000 crore rupee revenue milestone by 2027. To talk to us about this turbocharged journey and the ambitious goal of serving nearly 1 million travelers every month, joining me today is the co-founder and CEO of Intercity SmartBus, Manish Rathi. Manish, welcome to the show. A strong FY25, 70% year-on-year revenue growth and 10x profit increase. What were the key growth drivers behind this performance? And in an industry where scaling profitability has been a challenge, how have you managed to crack the code?
First, thanks, Shruti, for having me around. So I think, what we did across, I think if I were to summarize it in 3 factors. One, we made, we have changed the perception of the travelers towards the bus industry. It is more, people have started considering that as one of the mode of the travel they would take. So people are taking buses more and more. Second, I think, we, over the last 4-5 years, ever since we started, we made a conscious effort on looking at certain metrics which traditionally was not been looked across by the bus industry, be it across more towards, we focus more towards how we can realize more revenues from a bus as compared to the number of buses we are running or the number of seats we are selling. It was more about, operational efficiencies towards doing that. And the third is that, predominantly we've focused more on tech and data to help us understand where the industry is going, where our business is growing, and kind of use that data and technology to put it to the execution part. So those were the 2 or 3 things which really has helped up. Last 2 years, we are seeing all the results of all the investments we are seeing through that.
All right. Manish, like I mentioned earlier, Intercity is aiming for a 1,000 crore rupee turnover by 2027. What's your roadmap to achieving this milestone? What makes you bullish? And what role will technology play in reaching it? If you could take us through your tech edge as well.
Sure. So first of all, last 3-4 years, we have set the foundation for the future growth. So in a sense, now today we have built up our infrastructure, we have built up our tech and product and deployed it about 7 hubs across the country, where we believe we are going to scale in the next 2-3 years, connecting these hubs, these major cities to the Tier 2 and the Tier 3 towns, from where we are going to see the next 2 years growth coming from these hubs, connecting to the Tier 2, Tier 3 towns. So our technology is what has enabled us to grow. And that makes us more and more confident and bullish towards how we can scale. We put our eyes and ears in all our buses. we are now looking at, we are now looking at, we can now kind of scale across in the business without deploying more capex into that and more expenses into
Okay.
that. Technology simply enables us to scale.
Sure. Manish, you've set an ambitious goal of serving 1 million travelers every month by 2027, with plans to add 500 new smart buses over the next 2 years. How are you gearing up in terms of capacity, infrastructure, and fleet to make that scale up a reality?
Yeah, so as I said, I think our growth foundation we have already done. Now it is about scaling every city. So, for example, wherever we've seen a good product market fit, and we are still at a very early stage, probably only at about 4-5% of the market. We expect ourselves to grow to about 15-20% of this market over the next 2-3 years on all the routes where we are operating today. And this is where the growth would come in. This is where our primary growth over the next 2 years would come from. With regards to
Okay.
our technology, see, we all our buses, we call it as a cloud connected buses, in a sense that when it is running, it is connected to the cloud, and it has the capability to kind of transfer data from the buses to the cloud, and probably also receive the data from the cloud. This enables us,
Sure.
enables us with the data and this one around, and that really becomes the base for
Okay.
whatever we do.
All right. Manish, let's now talk about your revenue model. How does Intercity deliver tangible value to operator partners? What kind of growth or returns are they seeing? And how does your tech-led approach improve occupancy, efficiency, and overall utilization compared to traditional models?
See, our traditional partnership with our operator partners is really a more across the win-win. They have the what I cross is the knowledge and the capability to run and operate the buses. We have the capability of what across is technology and consumer interactions and those things around. So that's where the win-win probably for both of us come through. Over the last 4 or 5 years, 4 or 5 years, if I were to give you some examples, people who gave us about 2 buses or 4 buses about 3 or 4 years back have recently given us their 40th or 42nd buses. That's a scale and that's a growth they have seen across in their asset lineup over the last 5 years. Our hypothesis to them, and we give data around, is that assuming that if they are able to run their buses on the road, we can demonstrate a 15-20% increase on the revenues across from their assets.
Okay.
That's been the primary value proposition for us to the buses side.
All right, Manish, one final question, if you could quickly answer that. Intercity's companion app, Rail Yatri, continues to serve over 14 million monthly users. How well has it complemented your SmartBus ecosystem, and what kind of an impact do you see it making on revenues going forward? If you could answer that quickly.
It is a companion in a sense that travelers are the same. Sometimes they take trains and sometimes sometimes they take buses. So for our value proposition to them are there for help them out in any of the long distance journey. Trains is a great platform for us to connect to our customers or potential customers. It also gives us a lot of intelligence of how people are traveling across the country. And that is an intelligence we use to run across our buses also.
All right, Manish, on that note, it's time for me to wrap up our conversation. But many thanks for your time and appreciate you joining us on Startup Street today.
Thank you.
Well, Gen Z-focused women's fashion brand Outzidr has raised 30 crores in a seed funding round led by Stellaris venture partners. These funds are going to be used to strengthen the brand, enhance its capabilities, and deliver the latest on-trend fashion products for young women. The brand has launched its D2C platform and now is also present on e-commerce platforms, aiming to reach 100 crores in annualized run rate in the next 6 to 8 months. For more on this, joining me now is Nirmal Jain, who's the co-founder of Outzidr, along with Mayank Jain, who's principal at Stellaris Venture Partners, their investor. Mayank and Nirmal, both of you, thank you very much for your time here on CNBC-TV18. Nirmal, before we get to that funding, very briefly, give us a sense of how large the brand has grown to be in the last 1 year since you launched.
Thank you. And we launched in February, and it's been like less than 3 months since we went live, and we're almost at a annualized run rate of almost 20 odd crores as we speak. So we have seen some strong traction in a very short span of time, both across primarily in our D2C channel, our website, as well as on the marketplaces that we've recently went live.
All right. And Mayank, is that what got you excited? What got you to sign the check? When the company made their pitch, what were you most impressed with?
Several things. Predominantly, there were 3 pillars of our investment thesis. overall, we find the overarching market of affordable fast fashion to be very, very attractive. It's a very, very large market, very, very unorganized, very impulse-led and design-led, leading to high gross margins. In addition to that, company has a very unique test and quick react model, which allows them to bring trendy fashion fastest from a trend to shelf. And third, we felt that the team of Nirmal, Mani, and Justin had a very, very strong, what we call as founder market fit. They come from the fashion domain, carry a proven track record of achievement, and are very, very complementary in their skill set. So these constituted the three pillars of our investment.
I see. Well, Nirmal, now that you've got that 30 crores, give us a sense of how you're going to deploy this money in the medium to short term. What will be the growth priorities?
We're focusing on three areas largely. One is on the brand building side. Secondly, the core of our business is anchored around this entire test and react model. So a lot of investment will be actually in building out this entire capability set on building an agile supply chain that can quickly react, on right demand sensing capabilities, and as well as getting the right team in place to ensure that we can execute this at scale. And the third part of investments will go towards the technology bit, because technology is a significant enabler for our business. So these will be the three primary areas of investment in, let's say, in the next 6 months or so.
All right, Mayank, then at Stellaris, what do you estimate the size of the market opportunity for affordable fashion, especially focused on Gen Z, really is? And how much of it can new players like Outzidr really capture, because the space is heavily dominated with a whole host of large and small and young players?
So needless to say, the company at least is addressing the young females fashion market, typically females in senior school, college, first or second jobbers. This is, of course, a very, very large market in volumes. And affordable fast fashion, is roughly, by different estimates, 70 to 75% of the overall market, which can also be intuitively seen by the, several mom and pop unorganized fashion stores that we keep seeing. So it's a very, very large market. And in fact, on the contrary, I'd argue that there aren't too many organized brands that exist in this market, with a few exceptions. So we see a very, very large opportunity to build a brand and take some of those market share from unorganized players.
All right, so you hope that some of the unorganized share will come onto the organized players and Outzidr will be a beneficiary. But Nirmal, you talk about global fashion trends, bringing them to Gen Z women at very affordable prices, and this fast fashion is the term that you're using. But how are you ensuring this is more environmentally sustainable as well, especially when you're catering to a more conscious younger generation now?
I think being on trend and being sustainable, these need not be polar opposites. You can use good fabrics and yet be on trend, right? I think while there is a very common perception that fast fashion. So if you look at it, there are two sides to it: like how you create fashion and how much you consume as fashion. I think the company can take a conscious call whether you want to build a supply chain that's anchored around good fabrics and environmentally friendly fabrics, right? That doesn't mean that, and yet you can offer trendy products. So I think from a supply side of the entire business, we are focused primarily on ensuring that we provide products which are based on good fabrics with a healthy mix of, let's say, with naturally or natural fibers. Now, when it comes to the demand side, I think the choice of how much to consume should be left best to the consumer is what we think. I think if you really look at how the markets have evolved in India as well as globally, the core insight for our business is that today young women go out much more. There are many more micro occasions in their life, and they prefer occasion appropriate dressing for each of these micro occasions, and naturally that increases the demand or increases the frequency at which they purchase. And I think we believe that we as a brand would like to provide what this consumer is seeking in the best possible way at the most affordable price point and in a manner which is environmentally friendly. At least that's how we think of the brand and how we want to service this consumer.
All right, and you aim to get to 100 crores of revenue in the next 6 to 8 months as well. Nirmal and Mayank, thank you very much. That's all the time we had today, but it's been a pleasure speaking with both of you. Thanks very much.
Thank you.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up on the other side, the Young Entrepreneurs Fund, a $10 million initiative, was launched by marketing strategist Harshvardhan Chauhan. We speak to Chauhan of Bharat YEF about this fund. Stay tuned. Welcome back. You're still with us on Startup Street. The Young Entrepreneurs Fund, a $10 million initiative, was launched by marketing strategist Harshvardhan Chauhan. YEF allocates grants ranging from $10,000 to $250,000 to early-stage pre-revenue ideas, prioritizing societal impact and scalable solutions over traditional business metrics. Joining us now to discuss the fund and its agenda is Harshvardhan Chauhan himself, the founding visionary and chief belief officer of Bharat YEF. Harshvardhan, thank you so much for joining us on Startup Street, and that's quite a designation that you have given yourself there. But, before we get to everything, your career has been defined by scaling hyper-growth startups and redefining brand psychology, right? How has your journey shaped your vision for the Young Entrepreneurs Fund?
Absolutely. I think at the onset, namaskar, Arundhati, and to all our viewers. I'm humbled and it's a pleasure to be at your network and channel. I think, as you rightly said, my entire career had been built around, on both sides, 0 to 1 journey, building startups from scratch, whether it has been contributed in my own writing capacity to very early stage startups, which became a unicorn. At the same time, dabbling into large legacy change management and large corporates with the likes of Outzidr, TLF, RP Sanjeev Goenka Group, and Trident Group. I think at a right time, I got the realization of balancing between my karma and dharma, while the corporate endeavors had been my dharma of sustaining my own livelihood. The karma became to endeavor to pick up a bigger aspiration and a challenge, which would become the voice of Bharat. And that's what emanates Bharat YEF, where a strong belief has been, where I believe that the VC ecosystem in the country has been largely broken, specifically for the innovators in tier 2, tier 3 sectors, people who are innovating in agri-tech, deep tech, climate tech, and who do not get the opportunity of getting possibly through the doors of a traditional VC. And hence, it's a diagonally opposite approach at Bharat YEF.
Right, absolutely. And if we can get to the fund, the Young Entrepreneurs Fund offers grants ranging from $10,000 to $250,000, right? Which is a significant departure from traditional equity-based funding. If you could sort of, tell us which ideas or founders are how do you determine this, are most deserving of these grants? And what are the kind of impact that you're hoping to see in return?
Brilliant question, Arundhati. I think it's a complete departure from the traditional VC ecosystem, where I believe that it's not a few individuals who can decide which idea is the best. It's not few conferences, few pitches, and we wanted to make it truly democratic. So on 14th of April, we made world's first intuitive platform, BharatYEF.com Live. It's a platform which is a flywheel in itself. It's India's own Y Combinator. So at idea stage, there are at one level Bharat Karmyogis, who are ideators and who, in a very UGC fashion, submit their ideas with a small pitch which is posted on Instagram for the world to see. Their ideas are visible to the citizens of India, who in a gamified fashion, they are not putting in their real money, but it's like gamified crowdfunding where they say, hey, I like the idea and I would have ideally put in my own 50,000. So the meter goes on and you can see an impact where the entire Bharat has pledged, let's say 2 crores on a particular business, which is a strong barometer. But the strongest hook of Bharat YF is Bharat Fellowships. Bharat Fellowships are internships ranging from 3 months to 12 months, typically IITs, IIMs, SRCCs, Hindus of the world. And it's one of the world's, we say, most coveted internships where there's a real VC experience where the talent of the country from IITs, IIMs directly mentor a grassroots level innovator and completely over the platform, very automated, leveraging AI and ML, which basically means that the flywheel is covering 3 big pillars. Somebody who's an agriculturist and an innovator in the Bhagalpur of Bharat gets a great mentorship from IIT student, and they both come together and they move from an idea to MVP.
Absolutely. We're running out of time, but if you could quickly tell us, with your focus on deep tech, clean energy and rural platforms, what emerging trends or technologies do you believe have the potential to reshape India's economic landscape in the next decade?
Arundhati, on this question, I think I would have a strong synergy with the government of India. What the vision of Narendra Modi ji and Piyush Goyal ji also have been, and he has been very articulate during the startup Mahakumbh. So we strongly believe national IPs, deep tech and agri-tech is the one where we're investing. We're not investing for an exit cycle for next 5 years or 10 years. We're looking for Viksit Bharat 2047. And we have very early backers who are corporate stalwarts, the likes of Devendra Chawla, the CEO of Green Cell Mobility, TC as he's known, and more such corporate stalwarts who have been backing up our fund in terms of not just capital, but a whole lot of intellectual capital, mentorship, etc. that they come up with. And hence the focus would remain to reach out to the tier 2, tier 3 innovators, get the next Viksit Bharat 2047 ideas for agri-tech, for clean tech, for deep tech, and most importantly, support truly the national IPs, which would make India at the map of the world and truly to realize the dream of Viksit Bharat.
All right, Harshvardhan, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Absolutely. Grateful to be here. Thank you, Arundhati. Thanks a lot.
Bustling cities, a new kind of hunger is taking over the appetite for clean, conscious and convenient eating. One brand is not just riding the wave, they've also planted seeds nearly a decade ago. From tech-enabled kitchens to their own organic farms, they've built a salad empire, and they've also raised 30 crores in a Series A round, their first institutional funding after operating as a bootstrap venture for over 10 years. Aishwarya Anand puts a spotlight on the Salad Days story.
In India, salads have historically played the role of a supporting character. A few slices of cucumber on your plate or some cucumber on the side of your dal. But can a salad ever become a main event? 11 years ago, this thought was almost impossible. But today, it is a thriving category, and leading the charge is Salad Days. This journey started in a tiny cloud kitchen tucked away in a hidden corner of Cyber City, Gurugram. But the name Salad Days wasn't just about food. It was inspired by Shakespeare's words, symbolizing youthful passion, fresh beginnings, and idealism. And that's exactly what this business embodies. Challenging norms, redefining eating habits, and proving that healthy food can be just as exciting as a plate of biryani. We are here at their organic farm in Delhi, the backbone of their farm-to-fork model, to peel the layers of Salad Days from the roots. So, how did they become a successful health food brand in India? How are they balancing freshness, scale, and profitability? And can they turn salads from a niche trend into a mainstream staple? Well, let's dig in and literally and figuratively into the Salad Days story.
When we were doing trials, this is way back in 2013 end, you won't believe it was so difficult to get 10 kilos of iceberg lettuce of good quality every day. So I realized that solving the supply chain was a very big priority for me at that time. So the farm started to know our raw materials better. I think we grew everything that we could, everything that you can think of, which was seasonal in nature. This season we were harvesting about 10 tons of combined produce from here every month.
What does the SKU currently look like?
The SKUs or the menu categorizations, we just don't do salads, but we do a lot of awesome gourmet sandwiches. We do grain bowls. We do wonderful pita pockets, oatmeal bowls. We do a lot of beverages. We do desserts. So we do a lot of things. And salads in our menu contribute to about 50% of our revenue.
As a consumer, if I am buying from Salad Days, what would my average cart value look like?
We are very, very competitively priced.
Okay.
Our salads start from about 279 rupees, go up till 329, 349, with the median being around 299. So that's our salad cost, plus of course GST and some packaging charges. Our average order value is around 500 to 510 rupees.
So talking about kitchen, you are operating nearly 26 cloud kitchens, 25?
Last night we are at 28.
You're at 20.
Yeah, we opened one yesterday.
28 cloud kitchens. So, how do the economics of scale impact the profitability here?
I would like to open as many kitchens as possible in a city, which would hit a target number in, let's say, 1 year. I feel that as of now in our portfolio, on an average, we should have about 20 kitchens per city of these.
You've been profitable for 10 plus years, even before you got your funding. Where does your revenue start right now? And what are some of the targets for the end of this year?
We have been growing about 80 to 100% year on year in the past 2-3 years when it comes to top line. And last year we closed at about 31 CR net, and we should be closing again 80%, 100% plus from that, 80 to 90% plus from last year. And probably by the end of this year, I'm going to make my thesis around omni-channel strategy, wherein I would try to go for probably a brick and mortar or some other model.
India's healthy food industry is on a remarkable ascent, projected to touch $30 billion by 2026. Now, startups are at the forefront of this revolution, changing the way we eat one bowl at a time. The space has cumulatively raised nearly $200 million in the last few years. As innovation meets tradition, technology fuels the taste. One thing is clear: healthy eating in India is no longer just a fad, it is the future. With camera person Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
And with that, it is a wrap on this edition of Startup Street. We leave you with a snapshot of the big deals in the startup world that took place this week. More news and updates on the other side. Stay tuned.